second part of Forex. Today I want to continue my last video that was about basic information about Forex mastery. Okay, stay with me. These things that I want to tell you, they are basic information and also they are really important. If you don't understand this thing, you will be have a problem with another thing. Okay, stay with me and don't forget that if you don't have my channel, please subscribe my channel and ring the bell, and also I will be wait for your opinion in the comments. First, let us talk about fractional PEEP. What is fractional PEEP? As if you remember, we talk about a PEEP. And now we want to talk about fractional PEEP. What is fractional PEEP? This is providing an additional sense of a PEEP allows trader to minimize their cost and take advantage of even the most minute market movement. Look at here, I put something for you, 1.2001, and this is PEEP. This number 1 is PEEP, and this number 4, this is fractional PEEP. And always we see that in the market. After that, we have lots. What is lots? Lots are a measurement of the number of units of currency pairs that are being traded. Using lots simplifies trading in the Forex market as it provides a standardized trade size. What is a standard trade size? Standard lot is worth 100,000 unit of a nominal value of a base currency. A mini lot is worse than 10,000 units, and a micro lot is worth 1,000 units. Look at here, I put some picture for you to understanding better. This is standard, this is 100,000. This is mini, this is 10,000, and here we have micro that is 1,000. For example, if we want to talk about Euro USD, each PEEP movement on the standard lot trade is equivalent of a 10.0 movement. That is $10 movement. Each PEEP movement on a mini lot trade is the equivalent of $1 movement. Each PEEP movement on a micro lot trade is something about 0.1 movement. $0.1 movement. Here we want to talk about cash flow in trading. You know, when a trader opens and closes a position, his account is credited and or debited notional amount equal to the size of the trade times the exchange rate. The trader doesn't necessarily see the amount that is transacted. For ease, he sees the current he or she, it's depends on the person. He sees the current profit and loss that is reflected by this cash flow. To help you better understand this idea, let's look at following an example. I put some example for you. When you have open position and when you have closed position. Let us talk about open position. Mike wants to buy one standard lot. How much standard lot? It was something about 100,000 units of Euro USD at the price of 1.2350. In order to buy euro, he has to sell the US dollar amount. Got it? You buy 100,000 units at 1.2350 Euro USD price. And also, how much USD you have? You have 123 and 500,000. And here, about if we want to talk about close position, if the price of Euro USD rises to 1.2512, Mike may want to close the position by selling the same euro amount of, how much was that? That was 100,000. Upon closing his position, his account will be credited the dollar amount of, here, look at here, it sell 100,000 unit at 1.2512 euro USD price. Okay, how many USD he have? He has, look at here, 125 and 120,000. Did you get it? Upon opening his position, Mike's account was debited USD in order to purchase euro. When closing his trade, Mike received a credit for buying back the same amount of units of currency. The trade profit is the difference between the two things. Look at here, we have two numbers. That was the green one, that was a first number, and here second one, that was a second number. Okay, when here we want to get our profit, how many USD we have here, as we can see. And after that, when we get that thing that I told you, we should talk about margin and leverage. What's your idea about margin and leverage? Tell me in the comments. Traders and brokers are only exposed to the change in market value on an open position and the change in the value of most currency pairs movement about $1 a day. They are something about $1 a day. In fact, in 2011, the average value change for the euro USD per day was something about $1.57. The USD GPY, I mean the yen for the Japanese, the average value change was only something about $0.88. That's not much. Do you know, as a result, the retail traders are given leverage on open positions. Leverage allows traders to control large positions with a lower amount of funds. That can be good, but it can also be bad. Why? Because the leverage amplifies your gains as well as your losses. I put some information for you. This is the average USD value of daily range in dollar in 2011. That is for the past. I checked something for the past and I put here, and that's not important. After that, for you getting better something about leverage and understanding completely, let me tell you an example. For example, Mary deposit a USD, something about 10,000 in her account and in FXDG. She's encouraged by a strong US employment report to buy the US dollar. Since she feels the Japanese yen is too high, she buys USD JPY with the expectation that the USD will appreciate against. Remember, JPY will depreciate relatively as USD rises. That was the golden point. Now, Mary buys one standard lot. What was the standard lot? That's really important. Please memorize that. A national amount of USD $100,000. The control now Mary has a position. For control that position, she needs to post margin from the USD, 10,000 of available fund in her account. With, for example, leverage 50. Mary needs only pledge USD 2,000 as margin on a USD 100,000 position. Moreover, since their USD that was 8,000 of unpledged funds still in her account, Mary has room to take an even large position if she so desires. Okay, now let's assume Mary is correct and the USD GPY price moves higher from 79.50 to 80. At 80, Mary is content with her gain and she takes her profit by selling an equal standard lot of USD GPY. Let know and at first let's look at her profit and about leverage, and we want to get that how the leverage can help her. Look at here, we had two positions. First one, she bought 100,000 USD at this price. That was the price. Okay, with this price, how many GPY she can buy? This number. Okay. Now the profit of that is here. And of course, it's depend on the selling time. You buy that in this amount and you sell that, for example, 100 USD at this price. Look, they are different. Okay, you have this amount of GPY. Okay, your profit must be here. Thank you to watching this video. I'm really glad that you were here with me. If you have any problem, any question, if some part of this video was hard for you, you can tell me in the comment. I will answer all of them one by one. And if one part of this video was really hard and you couldn't understand this with communicating, I can make another video for you for understanding better. And don't forget that please subscribe my channel and activate the bell. Thank you.